Hello, this is John Piper with the weekend video clip, and it's Saturday the 21st of February. My throat's now a little bit better, so I can actually talk fairly well, I should say. Starting with the pound dollar, this is the daily chart. There's a clear one wave to there, and we've got a clear 5 here. 1, 2, 3, 4, 5, hence the call for the rally, which we've now seen. I've taken profits, as I said in yesterday's. What's not absolutely clear here is exactly how this bit fits in the sense that we've definitely got 5 waves down to there. That's a correction, so that could be a third wave, and then some kind of truncated, maybe fifth. So it's possible that we're seeing a 1, a 5 part 3, and a 5 part 5. The only thing I don't like about this is that this section here, which should be the fastest, is actually not so fast. It's neither as fast as wave 1 nor as wave 5 on this count, which makes me think maybe the count is incorrect, and maybe instead we're seeing a 1, 2, then a 1, 2, and this thing here might be the third, although it's actually still slightly shorter than the first wave. So some confusion here. So clearly this is a decent rally of some description. It's now retraced, it's gone from 150 to 155, 5 cents or so. So I think if it's corrective, we're due probably with a pullback now, but I'm thinking it may extend a bit. It depends exactly where we are in this sequence, and it needs a bit of careful monitoring. But I don't think the move's over yet. Let's have a look at the longer term chart here. Okay, this is the break of the triangle which we traded back in 2013. We then saw this bounce from this level here, which obviously is not too far away from the current levels. I think the current move is actually going to break this. It's just a question of where we are in the sequence. If this is all a 1 wave, then we could get this kind of 2 wave type thing, and then we could just come down sharply. So again, it would mean disruption later in this year, which I think is quite likely on this chart. We just need to monitor it more carefully. Let's have a look at gold now. Okay, I said last weekend that gold was looks to be we want to test 1200, and it's certainly doing that. We saw a bounce there. We're now back there again at the moment. We really need to see some solid buying at this level. If we break down below, if we see acceptance below 1200, then it could go a lot further. Let's have a look at the longer term chart. This is the weekly chart. We had the first leg down here in this triangular format, a wave 2 there, then a wave 3 down to there, then an ABC type thing to there, and then we had 1, 2, 3, 4, 5. Bit truncated fourth wave compared to the 2 wave, but there was a good case that we had seen a low there. We then saw that decent rally up to 1300, and now of course we've failed. So it's not looking too good here. ABC for the first rally of the daily chart now. Correction, and then a C wave rally, which has now failed and breaking below 1200. The gold miners continue to be a little bit stronger. We've seen $100 down here, which is about right. For comparison, here's the market vector gold miners ETF. So we saw a low at 1700. Again, we've got an ABC type rally, but you'll see whereas at gold is almost traced, well, almost all of that, we're still actually doing quite well on this. I mean, okay, 2000 is a key level, but right now, this looks like a very corrective type pullback, whereas on gold it obviously looks something like something else. In fact, it could even be a fourth wave. We haven't. Well, actually, we're about to cross this level here, but we're close to crossing it here. So definitely looks a bit stronger on that market. We go back to gold itself. So again, look at the gold chart. We can see that the initial rally here, gold has now gone through that high quite significantly, whereas I say on the gold miners we're still hovering around here somewhere. So there is a difference there, but of course this does need to reverse, and we do need to hold some support, and it's open right now. So look at the Dow. I said in yesterday's report that looked like markets were poised to move higher after expiry, and this is precisely what happened with markets moving up. So we now got this rally here above 18,100. And having got into new territory, the wave count, if we count that as a 5 to there, there's a possible 4 there, 2 there, then a 1, 2. This could easily be some kind of third wave coming in, so that could be good next week. So look at the DAX. Again, yesterday's report I was saying that we could easily see the market move above 11,000. and it's blipped up there, came back right down again, and blipped up again. So again, looking positive, and FTSE didn't achieve too much on the official market, but on IG now we're seeing prices around 6950, which is equal to the all-time high. So I think it's a good case that we'll see the market make new all-time highs officially next week. The actual intraday high was 6950. I think the close around 6920, 6930 thereabouts. But it's the intraday figures I look at rather than the actual closing figures. Okay, on that basis, actually we'll have a look at Nikkei DAX. I said in yesterday's report that the Nikkei was leading the way. You see it hit a mood of 18,000 earlier in the week, and yeah, this looks like it could be a solid breakout. We're still longer than Nikkei have been since the breakout above 10,000 in 2013, which is a kind of big call I really like. I'm hoping gold will emulate this, but looks like it's going to keep us waiting a bit longer before it does so. Have a great weekend. Thanks for listening. My voice isn't too bad, and bye for now. Cheers.